with Lupin because Lupin reported a good set of numbers ahead of the street estimates in terms of numbers, whether it's in terms of revenues or the profit growth as well. Let's bring on board the management of Lupin to talk about their numbers and the growth outlook going forward. We're joined by Vinita Gupta, CEO at Lupin, Nilesh Gupta, Managing Director at Lupin, as well as Ramesh Swaminathan, Executive Director and Global CFO and Head of Corporate Affairs at Lupin as well. Thank you so much for joining in with us this afternoon on ET Now. Nilesh, I'm going to start with you. India business, the growth has revived back, and that to the double-digit number that what you're seeing coming in there. What were the growth drivers this time around? If you could help us highlight that, and how to expect the growth going forward? Do you think this is sustainable?
So we've been lagging a little while, but like we said, from Q2 onwards, we expected to get back to double-digit growth. Very happy that it happened in Q1 itself. The growth year on year was 10.2%. In fact, if you take out Spinmas from the base and you adjust for price impact, the growth was actually 13.6%. So ahead of market growth. And I think that's really, it's really outcome of some of the efforts we've been putting in. So as you know, we've added 1,400 representatives last year. Our total sales force is now about 9,600 people, 6 new divisions. Basically, we're doubling down on India, and you see it in our key therapy areas. So we're obviously chronic focused, but if you look at respiratory, we're basically growing close to double the market growth rate. Cardiology, again, we're back to ahead of market growth rate. Diabetes is the one portfolio that was kind of holding us back. We actually had degrowth last year. Happy that it's actually moved to growth. We're still under the market. Market grew at 6.5%. We grew at 4.4%. But it's good to be back on that growth. And really, this momentum we expect to continue. So, the effect of the additional sales force is still to be, felt enough even. And then obviously, we're extremely focused on India. So I think it's an effect of doubling down on India. To us, it's a great opportunity, and we certainly intend to capitalize on it.
Right. I'm Harsh also joining in. Let me quickly take it to Vinita. Vinita, talk to us about U.S. growth. Good numbers with regard to U.S. growth, at least at the outset. How should one look at the revenue going forward? Did the current revenue also include the Prazista launch? How should one look at U.S.?
Yes, we did launch Prazista in June. But the rest of the business also did well. Our material products did well. So the seasonal products were down in the first quarter, but all of our other material products, albuterol, lisinopril, Suprep, and the Prazista launch more than offset it to grow the U.S. business.
Vinita, also if you could just help us, how is the generic price erosion scenario in the U.S. as per your interactions? We have been hearing a lot in terms of mixed views from various companies. So what are you hearing now?
So the price erosion is down to a low single-digit percentage at this point for our portfolio. And I think it will vary from company to company based on the exclusivity of their products and as well as additional competitors. But, in the last couple of years, there's been a lot of pressure on pricing in the U.S., which led to a number of product exits for us as well as our peers. And, the industry is concerned about drug shortages. So the focus right now really seems to be on, supply chain sustainability, to ensure that there's no disruption on product supply, which is a good change from the last couple of years. So we see pricing pressure, especially on the base business, really at low to mid single digits going forward.
Right. Let me switch it over to Ramesh. Ramesh, despite good improvement with regard to your gross margin number, EBITDA margins don't seem to have improved much. Can you help us understand what's really causing that? Certain cost items are higher. Any one-offs? Could you help us break that down?
Yes, for sure. As you correctly guessed, it is actually some parts of that as well. There is, of course, the component that is actually going into higher investments, So as Vinita and Nilesh were saying, there is, the 1,300 people that we added to. There is this, the sales and promotion expenses, of course, we have been, this is the investment part of it. There is also a couple of other items, So we have been spending on nitrosamines testing, impurities testing, and that the consultancy expenses on that is actually coming in. And this will, it's actually continuing from the Q4 itself, but this is something which is one time in that sense because it won't continue for longer than this. And there's, of course, a business settlement provisioning that we have done, a small component for potentially for one of our customers, one of our parties. And all of these actually put together, it kind of stymied the margins a bit. But these are, a couple of those, the two items that I mentioned are really one-off, and you will not see that going forward.
We'll also add to that, Ramesh, the R&D investment was up quarter-over-quarter.
Yeah, the R&D investment is also up.
Right, and Vinita, that R&D expense which you are taking, which is, you said, is up as well than the previous quarters. Any specific reason for that being higher?
Yeah, so in a couple of areas. One, in our biosimilars pipeline, we had additional investment. Also, we had a couple of patent litigation, products where we had additional spend in the quarter. It just ended up falling into the same quarter for a couple of products. And these are all pretty, strong opportunities for us in the next 12 to 24 months. So pretty much in those two areas.
Right. And, Ramesh, let me come back to you. Does Spiriva help us cross that 20% EBITDA margin in Q3? How should one look at it?
We had kind of indicated that, successive quarters, you would actually see an increase in margins. And obviously, the addition of products of this kind will certainly add to the overall top line and the bottom line. So you could expect margin improvement. And of course, we are also working so much on cost initiatives. All of this have actually been bearing fruit. We had guided for over 18% when it comes to the Q4, the exit run rate. We should be comfortably, exceeding that.
Right, and Ramesh, do we expect tax rates to now come off now that US is giving the sign of profitability there? So what is the take on that?
Yes, essentially that is one big reason why it has actually, it's come off. In India itself, in fact, we are applying MAT rates really. When it comes to US, of course, in the past there was this loss. So and this, of course, eroded into the bottom line that went into the ETR calculation. But now that we have the benefit of, in fact, profits in America, but we also take benefit of the NOLs that have been created in the past. So there's a smaller portion of taxes that needs to be paid. So overall, we do expect the tax rates to be well under a leash, so to speak. We had indicated. I think we should be closer to the 22% mark for the full year.
Right. Thank you so much, all three of you, for joining us and giving us that perspective. Management of Lupin talking to ET now. Let's also quickly move on. We also have the management of Sun Pharma.